What's going on, everybody? Jeff here. Welcome back to the channel. AMC with a 50% move since Tuesday's pre-market lows to where we stand as I'm making this video. I want to talk about some of the action behind the entire movement. And I'm also going to talk about what happened yesterday. More specifically, the tech sector took a heavy hit on news from the UK. And I want to talk about it because it could have a positive effect on heavily shorted stocks, specifically AMC. So we're going to break everything down. Let's get right into it. First off, as you can see today, nothing but strength, continue to make higher highs. Now, as you can see here, Friday and Monday, the patterns were very similar. Pre-market hung kind of flat. As soon as it opened, heavy sell-off, continued shorting, and it just hung around all day, never really recovered. Tuesday was a little bit different. Going into the open, you saw a massive sell-off until we got to that $20 psychological level and never looked back as soon as the market opened. As you can see here on Wednesday, a little bit of selling and probably some additional shorting by retail on just some short quick plays leading into the close of the Fed meeting. And it recovered because Powell reinstated the confidence in investors on saying that the asset tapering, the acceleration that was going to happen was very reasonable, and the interest rate hikes are still not going to begin until June of 2022. But before we get into what I want to talk about, what happened over in the UK, I want to take a look at the tech sector, which was heavily hit. Okay, so as you can see here on Wednesday, as soon as the Fed meeting ended, rip, just green buying power. Investors were pouring back in until yesterday morning, and that's where you saw this insane heavy sell-off. We're going to talk a little bit about the news. Here was one of the articles that was released. The Bank of England decided to raise interest rates for the first time in more than 3 years in order to combat inflation. Now, their inflation is running at 5.1%, which is obviously the highest in a decade, just like ours is, but that number is still lower than the United States. They increased it from a quarter to 0.25% from 0.1%. So maybe thinking to yourself, okay, they talked about this and so forth, but here's where the kick kind of happened. The Bank of England seems to like a surprise. Last month, they acknowledged the expectation of an interest rate rise to be happening, but it held off. And the reason why they held that off is because of the Omicron variant, the rise in cases, the rise in hospitalization. They don't want to shake the economy too much. And out of nowhere, they decided to raise the interest rates. So what happens because of this? There are some funds, because there's a lot of outside international money inside the United States stock market that are probably have heavy positions borrowed on margin and don't really want to have that large of an exposure, or potentially could get margin called, which caused for a little bit of a panic and a massive sell-off to happen. One thing I will point out to you, which I do not have posted here, is yesterday at about 12 o'clock on my time, which is the Eastern time, this individual, FX Hedge, I do not know who he is. I will say this. He seems to be privy to a lot of early information. And he had tweeted yesterday, I think it was about an hour and a half before 2 p.m., saying NASDAQ margin call. And when you look at the QQQs on exactly what happened, not only throughout the entire day, but once 2 o'clock hit, that massive acceleration, and the same thing happened inside the SPY. So what could potentially be happening from this? As you can see, the SPY, same thing, massive, sell off into it before buying coming back. That could be leading to not only a little bit of market choppiness, a little bit of capital coming out of the market, but like we all know, any position that is excessively over leveraged, that's where investors are going to take another closer eye. Now, before I get into talking about AMC specifically, I do want to mention we are getting into the close of the year, and a couple things happen. Normally, we would have a little bit of a Santa rally by now, but we have a couple things happening. And one person did reach out to me and say, Jeff, do you believe the fact that they may tax unrealized gains next year could be causing some, big, people that have massive gains to be able to sell their positions in order to hold off on their positions? Well, I do think that is a plausible thing, I don't think it's playing a serious role. I will say this. There are probably a lot of funds as well as retail that are holding bags on their positions that have not recovered yet. And naturally, I know I do have a couple myself. Naturally, by the close of the year, when you're looking at, okay, I'm looking at capital gains of X amount and I might have this massive tax bill, you know what? This price is hanging. I still believe in this company. I might get back into it. My biggest one, unfortunately, is Wish. I will be honest with all of you guys. Everybody inside the group knows that. It is Wish. I do long-term think that company can turn around. However, within the next 30 days, I think it's probably going to stay stagnant, and I will take that loss in order to offset some of my capital gains. So that does happen this time of year, so keep that in mind. Let's get into AMC. First thing I want to highlight is the volume today, currently sitting at 116 million. We have 2 hours till the market close. I expect that to get clearly over the 120, 125. Last time we saw that volume was back in, I mean, I'm looking right now, I think it was back all the way in, in August. Okay, in early August when we saw this massive spike. That brings attention, that brings the ability, that brings volatility, that attracts individuals to come back into the stock, especially finally hitting that $20, which was a massive psychological price point. When we hit that 30 for the first time, we bounced around a little bit. We had that rip back up to 52. Now, considering the short interest has increased, because naturally when you see this flag start to, this massive flag you see here sitting on a pole, start to break to the downside, as well as, okay, some of the issues that we've had inside and the turmoil and the fighting that we've had inside, you know, the ape community, which we all know that hedge funds, okay, these big funds will hire interns to be able to not only cause some of this, but to be able to do some research on this. They were adding to their positions, holding their positions and not letting go, thinking that they're going to get this below 20 and back into a place to where, one, they're either green or they can slowly start to unload some of their position to where they potentially could be able to get out of it. And I'm not talking about the big guys, okay? I'm not talking about anybody who had a little built-up position from the 60s that didn't close in the 30s. They might have regained back in that 36 level area. But like I said, now you're building confidence and attention and attraction back into the stock. And from a professional retail side, looking at this, once you can see some of this massive volume coming back in, which I mentioned in my last video, just seeing this curl up happening here, okay, the stock has range, all right? It's known as a former runner, okay? We're not sitting at all-time highs where potentially it's like, all right, how much more can it go? No. Everybody knows what it's already done, which means it can easily get back to that 140% gain going forward. This is just going on from my experience, so I'm telling you where it kind of sits at. We are going to have a little bit of rejection. I mentioned in a tweet earlier today. If you're not following me on Twitter, it's link in the comments. I don't tweet often, but like I said, when I do, it is bullish. Little resistance at 28. Give us a free ride back to 30. 30 is going to give us a little bit of psychological, especially because today is options expiration. By the time you're watching this video, we do have the 200 moving average, which never really acted as support for us. As you can clearly see, we broke right through that very quickly. Did have a little bit of resistance, which you probably will around that 30, let's say about that $31 to $32 level. Once we can get the curl starting to happen, especially on the MACD, I will zoom over here for you guys. As you can see, we are getting that curl. But take a look at this before I close the video. The volume, it's bringing back. That's amazing because, like I said, that was the biggest thing that AMC was lacking from an attention standpoint. And you can also see it starting to pick up on the scanners as well. Before I close out this video and talk about the options volume as well, getting close to 1 million, okay, a 2-to-1 call to put ratio. I want to point this out for everybody that has been following me for quite a period of time. And you've seen that rotation. And this is going to go for everybody who is interested, obviously, in other stocks. I day trade as well. We haven't seen this in a while. Look at the Dow and the S&P are red, but you have your tech and your small caps, the green. So while a lot of you, okay, we're seeing some red in your portfolio, we're seeing some of our favorite stocks, you know, beaten down, especially some of these small caps, okay, it runs in cycles, it rotates. So when we saw the Dow up, 100, the S&P flat, the Dow, the NASDAQ was down 200. It all rotates. All right, and money will eventually rotate back into obviously these two sectors. So, guys, that's it for this video. Enjoy your weekend. I'll see you in the next one.